Welcome to the podcast, everyone. This is Andrew Johnson, and I have with me Dave Fraser and Rob Campbell, my co-hosts on The Art of Boring. This is our last podcast of 2020, and we know this year has been a difficult one for many people around the world. And each year, we publish our annual holiday poem. And this year, as a small token of appreciation for our listeners, we've decided to record that poem, even if that ends up being a regrettable decision. On behalf of everyone here at Mawer, we want to wish you, your family and friends, all the best this holiday season. And with that, Dave is going to kick things off for us.
Twas the week before Christmas, and you know it's true. COVID looms large in our annual review.
The coronavirus surged at the start of the year. Breaking news seemed dismal. The result was much fear.
Lockdowns inevitable. We sheltered in place. Businesses and employment, much suffering they face.
Risk assets did plummet. Volatility rose. We strove to stay balanced through uncertainty's woes.
We oft say, don't fix a ship. Our approach, we stayed true. Good, strong business models and balance sheets too.
But sentiment turns on a dime. Resilience is key. Be in two places at once to create offsets, you see?
Unprecedented stimulus, government's concession, played tug-of-war with demand suppression.
Q2 came and rebound. Reactions to stimulus. Fiscal or monetary, investors were joyous.
Interest rates remained low with recovery chatter. The markets kept rising, searching for records to shatter.
On Tesla, on Snowflake, on Airbnb, on DoorDash, the tech darlings flourished despite not making much cash.
With a global pandemic and economic contraction, we saw all-time highs. Seems a strange reaction.
Low interest rates can help explain this conundrum. The lower the discount rate, the higher valuations become.
Conjecture over elections make investors disturbed, but we always think long-term, our holdings less perturbed.
And now the U.S. gets Biden, some call him Old Joe, a more conciliatory tone towards trade. Ho, ho, ho.
It's near the end of the year. Vaccines bring some hope that restrictions could ease this slippery slope.
As the vaccine ushered in a market rotation, is value back in favor, or is it just equity duration?
While there's no crystal ball, we potentially see positive but slower growth from accommodative policy.
Negative correlation between bonds and stocks should continue to function as a hedge against shocks.
While we watch inflation, the rebound is tenuous, deflation more near term, and risks are continuous.
We focus on resilience, no matter the churns, and managing risks rather than just seeking returns.
For everyone that's reading, may you share great cheer, wishing health, hope, and prosperity, and a happy new year.
So that's our poem. Just another big thank you to all our listeners throughout the year. We've covered a lot of topics through 2020, which has been a tough year. Covered topics going from gaming to interest rates to COVID and our response to it, and hopefully that's brought a little bit of peace of mind as we navigated these tough times. Looking ahead, we'll be covering more great topics in the new year, so we'll see you then.
And just one last note of appreciation to those on our marketing team, Sabrina and Joe, who put up with us as hosts week in, week out on the podcast, have the job to edit what we do. Just thanks so much for everything that you do, including having authored this wonderful poem and making sure that our clients can hear the art of boring.
The phrase herding cats comes to mind.
For everyone that's reading, may you share great cheer, wishing health, hope, and prosperity, and a happy new year.
Happy New Year.
Okay, we're going to start on and the very last sentence. I'll count us down into it, okay? And we're going to go when I point to the camera. 3, 2, 1, and a happy new year. And a happy new year. Can we just say it a bunch of times and then layer it on top of each other?
And a happy new year.
And a happy new year.
That's going in the blooper reel.